Hello and welcome to the Cryptocurrency News channel. So as you can see from the title of this article, Bitcoin's price fundamentals are in moon mode. Now, I don't know if it's really in moon mode because when the stock market drops after the election, I don't think Bitcoin's going to be mooning too much, but maybe. Also, the CME futures, the trading action, also points on a lot of bullish bets. So there is a little bit of validity in this. I don't really pay much attention to these price fundamentals because it's like that doesn't really mean much these days, but let's actually go over it. Despite an uneventful month for Bitcoin price, on-chain metrics suggest that Bitcoin may be gearing for an imminent bull run. Been gearing for an imminent bull run for like the last couple of months. Noticeably, the number of Bitcoin held on spot exchanges has been decreasing since the start of the year. So people taking Bitcoin off of exchanges, generally bullish because that means they don't plan to sell them on exchanges, according to data from on-chain analytics firms CryptoQuant and Glassnode. Crypto analyst Willy Woo noted that this change in trend is extremely bullish for Bitcoin. And I would argue it is fairly bullish for Bitcoin because if people aren't selling them, that means, and the demand stays the same, that means the price will eventually go up. When coins on spot exchanges drop, it's a sign that new buyers are coming in to scoop coins off the markets and moving them into cold storage. We're seeing new holders right now, very macro bullish. Just to remind people, Grayscale did actually just buy up all the Bitcoins that are going to be mined in the next year and a half. So there will be a lot of demand for Bitcoin. And obviously when Bitcoin goes up, the rest of the market goes up too. While a decreasing number of coins held by spot exchanges can also point to an exodus into derivatives exchanges, maybe flows from the former to the latter have also been decreasing according to data from CryptoQuant. So they're not on like spot exchanges and they're not on derivative exchanges. People are actually holding, which is very, very good news. The flow from derivatives exchanges to spot exchanges and hard wallets could possibly be exacerbated by a recent CFTC and DOJ legal action taken against BitMEX. And another thing is the FCA just banned crypto derivatives in England. So the walls are closing in on crypto derivatives. They may not be so hot for very much longer. The trend in coins held by spot exchanges started to change in the beginning of 2020, and it paints a familiar picture for traders. It reminds them of 2017, and we all know what happened in 2017. The dip resembles the accumulation stage of late 2016, which in turn fueled the 2017 bull run. So we're right now late in 2020, so maybe this will fuel the 2021 bull run as people are actually accumulating. That saw Bitcoin price reach its all-time high of $20,089. So this time I expect it to reach much more than $20,089. Both stages have followed noteworthy events like the prospect of a Bitcoin ETF led by the Winklevoss twins. But as long as Jay Clayton stays the head of the SEC, I don't think that's possible. However, his term does end next year. And recent buying frenzy by business intelligence giant MicroStrategy, according to Wu, the market has failed to react to these on-chain indicators. He tweeted, "This is one of the few times in my Bitcoin career where fundamentals, on-chain data, and metrics from infrastructure players are in moon mode, yet the market is not awoke to it." And part of that reason is because our economy is still sucking right now. Despite what the stock market says, the overall economy is pretty weak, and people just aren't as confident in investing in assets. They will be by 2021. This is an opportunity I've not seen since mid-2016. I'm still waiting for one more gigantic dump before I actually come in full ways. I'm already 70% in, the other 30% waiting for that gigantic dump. A depleting reserve of BTC on exchanges is a bullish sign for Bitcoin from a macro perspective. However, some suggest the changing trend may be caused by the growing popularity of DeFi, so people might actually be collateralizing in DeFi, and that has different aspects. And other liquidity-related protocols that have created a deep demand for tokenized Bitcoin and the liquidity that comes with the asset. So they're using Bitcoin to actually collateralize. That technically should also be bullish because that does take it off the market. This would still paint a positive picture for Bitcoin as it shows users prefer to receive interest for holding BTC than to take profit. While there is nearly $1 billion worth of Bitcoin on the Ethereum blockchain through Wrap BTC alone, the tokenized version of Bitcoin only started gaining traction in late June 2020. So I think DeFi and other things definitely have a part to play in this, but I do think some people are some parties are accumulating, and I do think large buys from Grayscale and other firms are actually painting a bullish long-term picture for Bitcoin. So that is the news for today. Let me know what you think, like and subscribe, and hit that bell notifications button. Thank you and have a nice day.